Want to profit from the next generation of high-growth investments? Singapore just dropped a game-changer in green finance you can't ignore. What's up, everyone? It's Profit Path Trading. Singapore is pushing hard into green finance, and it's not just about being nice to the planet. This could reshape investing, especially for those who ride the wave early. Today, I'll show you what's happening, why it matters, and how you might position yourself to benefit. The Monetary Authority of Singapore has launched the Green Investments Partnership, GIP, and raised $510 million in capital. The goal? Mobilize up to $1 billion into green projects. These projects are those that are risky or unattractive to typical investors, like clean energy infrastructure, carbon reduction, or transition from coal in Southeast Asia. When governments put in capital plus policy support, it tends to reduce risk and open up opportunities for private capital. You often see strong returns in sectors aligned with policy because of grants, subsidies, tax breaks, or favorable regulation. Green infrastructure is long-term. If you invest wisely, you might see stable growth plus demand, carbon credits, renewable energy, ESG mandates. This could also shuffle capital flows. Money may move from traditional sectors into renewables, clean tech, etc., which can cause sector rotations. Timing risk. Government projects are slow. Execution risk is high. Regulatory delays, cost overruns. Policy risk. Changes in policy, both local and global, could impact returns. What's favorable now might be less so later. Greenwashing. Not all green projects are equal. Some may have weak environmental impact or be less profitable. Overvaluation. When everyone starts talking about green finance, prices may run ahead of fundamentals. Keep an eye on companies exposed to renewable energy, battery tech, carbon capture, clean infrastructure, especially those operating in Southeast Asia. Look at investment funds or ETFs focused on ESG/green infrastructure. See if there's Singapore/Southeast Asia-focused green funds. Monitor government announcements, tenders, subsidies. If Singapore is raising money for transition coal or clean energy, follow those projects early. Diversify. Include some green exposure, but not all your portfolio. Balance risk properly. Emerging projects plus established firms. So, to sum up, Singapore is pushing green finance in a big way. This isn't just feel-good investing. It's potentially a structural shift with policy backing, big capital, and long-term tailwinds. If you can spot the right names early, there's real opportunity. Comment below, which green sector do you think will win big in SEA? Solar? Clean energy infrastructure? Carbon credits? And if you want, I can pull together a list of top green stocks/ETFs in Southeast Asia to watch. Hit subscribe/like so you don't miss that.